Hey everybody, Tyler here. Black Knight just came out with some new information that just dropped about the real estate market when it comes to delinquencies and forbearances. And the numbers are up, actually a 10.8% increase in foreclosures. Yet with 90% of all of the homes out of forbearance, the question still remains. Are we going to see a foreclosure crisis looming around the corner, or is it going to disappear altogether? Now, since 90% of all of these 8 million homes are out of forbearance, I think we have enough information to make a determining factor on what may be coming down the road, whether good or bad. Now, it's not all crystal clear, as we'll see, but just under a year ago, we had just about 8 million homes in forbearance. Now, with such a huge number, it caused a huge scare in the economy on what could happen down the road. But a significant number are now out of forbearance, and we're going to go ahead and take a look. So come along with me and let's take a look at that data together. Okay, so starting out right here, this is the number of new mortgage defaults year over year. And as you can see right here, we have an increase in the number of defaults by that year. So a couple things that I want you to see here is right here, it's 90 days for default. These are the homes that have defaulted, have been delinquent at least 90 days but are not in foreclosure. This is key. This is not a foreclosure. This is just defaults for that year. And so we are seeing a current increase from 2021 in the number of defaults that were past 90 days. Now, if you look over at this chart right here, the number of foreclosure starts year over year, 2021 was at the lowest we've ever seen. Now, we had a moratoriums that prevented forbearances, and now with them ending, we're going to really see how we're going to be faring moving into 2022. Yet we have enough data from 2021 to really see what has been happening so far. So like it says right here, foreclosure activity will be worth watching closely in 2022 now that they've all stopped, and to see how people are going to exit forbearance moving forward. As of right now, January 25th, we're in the month of February right now, but there is 835,000 mortgages still remaining in active forbearance. What's interesting though is right here is that 82%, it's down 82% from just from the mid 2020s and 2021. So that means a significant portion of the homes are out of forbearance, and we can see that data on how they came out. Did they default? Did they pay off their mortgage? Did they resume payments? We're able to see that data. But at the end of 2022, we will have 100% of everyone, including these 835,000 homes, out of forbearance, and we'll be able to see. But the data is really, really interesting and intriguing. This is just kind of an overview. 7.9 million homes at one point were in forbearance, and this is a breakdown of really what has happened. In active forbearance, paid off, nearly 8 million, almost 90% have exited their plans, with more than half returning to making mortgage payments. Interesting, 27% paying off their mortgages in full. That tells me that a majority of at least 27% have the ability to continue to make their payments, but because there was no penalty in going into forbearance, they did, because they didn't know what was going to happen. How bad was this pandemic going to get? So, hey, let's just take what the government's giving us. Let's preserve our cash, and let's figure out what's going to happen, and let's not make any major decisions. And that's kind of what we saw. This graph right here, these charts are the most interesting and very, very intriguing. So this begins on 2020 in April, okay? This is when we started seeing forbearances, and then we moved out of them. So we see the performing people in forbearance during these months and the amount of people that paid off their homes in forbearance. So these people paid off, the gray represents paid off. This is really interesting. As we moved on into 2021 and towards the end of 2021, there is fewer number of homes paying off their mortgages. and a greater number of active loss mitigation. Active loss mitigation is basically me, the homeowner, working with the bank to prevent me from going into foreclosure. It's an active communication between the bank to either redo the loan, to figure out something different. I mean, right now there's talk about restructuring loans to make them 40-year loans, which is a big deal. It could reduce the number of foreclosures tremendously by simply doing that. Your payment's going to drop dramatically. But it's just crazy to see that the people that could pay off their homes did early on in the forbearances. The people that have extended over and over and over are those that are needing to extend it. And with that 835,000 homes left on the market, who's to say that maybe they really need that forbearance, and what happens when they come out throughout 2022? That's really the big question mark in all this data that we really don't know, is that 835,000 homes, as we've seen right here, a majority of them now are active loss mitigations. Roughly 30% are still in active loss mitigation. So this population is central not only to potential 22 foreclosures risk, but also worth watching for the number of ways they may impact the housing market. And what they mean by that is we may see an increase of homes. Why? Because really the data starts showing us the amount of equity that we see on the table for these homes. Right here, the tappable equity climbed to a new record in 2021, hitting an aggregate total of $9.9 trillion. That is absolutely crazy to see. 35% increase in the year-over-year change in tappable equity. That means the equity has increased. That means these people that are in forbearance may not know that they have this much equity in their home. They may not know how much their home is worth. And if you're a realtor watching this, this is a very important conversation that you can have with potential sellers that may be in a hardship. Is you probably have a lot more equity in your home than you think. And this just further elaborates on this. This is absolutely crazy. So this is the annual home price growth rate that we're seeing throughout the country. These are in the top 100 largest markets in the United States. What is absolutely fascinating is right here is that the floor, the very bottom of these top 100, the home price increases is still 9.1%, and that's in Washington, D.C. That, like they said, quite high for the tail end of a growth cycle. That is pretty crazy. So that means at the worst in some of these bigger markets, we're seeing that there could be a 9% increase in the value of your home. Well, that covers more than just the realtor fees and cost to actually sell your home that you probably could get out of a difficult situation if you had to. But then you come to another issue of affordability. Are you, as a potential person in forbearance, going to be able to afford rents in your particular area? So we're going to have a catch-22 here that's going to be very interesting to see how it plays out on maybe they're going to have to relocate to a cheaper market because let's go on to the next slide here. This is payment to income ratios state by state. This is incredible as well. And I'm proud to say that Nebraska is extremely affordable. So what this is saying is that your payment to your income ratio is a percent. So the higher percent means the higher you're making for a payment for your house compared to your income. So Nebraska, where I live, is 15.9%. So a payment, let's just say I'm making $10,000 a month at 15.9%. That's roughly saying your monthly payment is about $1,600 a month compared to a $10,000 a month income. That is crazy. That's extremely affordable. And you can see what I highlighted here. The Midwest particularly remains relatively affordable compared to other parts of the country. And the most unaffordable area is California. It has the top 4 least favorable or affordable markets in Los Angeles, San Jose, San Diego, and San Francisco. These hiked up prices are really coming from one thing: a shortage of homes. a shortage of inventory for homes. Over the past, since 2019, we've seen a 60% decrease in the number of homes available. And right now we're at a deficit of about 500 to 750,000 active listings compared to 2017 and 2019 for December inventory levels. This is a big deal. We are at a shortage. So we need new construction. We need existing homes. We need sellers to sell their home, and that's why prices are so high and really could actually cause a foreclosure crisis to simply disappear. If inventory stays as low as it has been, and these buyer or these people that are in forbearance, that out of the 835,000 of them that really need to be in forbearance, their equity in their home is only going to increase. So are we going to see a foreclosure crisis? I'm going to say probably not. And we're going to go over some numbers here locally so you can see numbers for your state. I don't see a foreclosure crisis coming. I think it's simply just going to disappear because of the lack of inventory. Now, it doesn't mean that there's going to be people having to sell their homes. We may see an increase in the number of homes coming on the market simply because they need to sell and get the equity out instead of foreclosing on their house. So there could be a flood of inventory, but because we're at a 60% decrease or deficit of where homes or the amount of inventory we need as a nation, and that's 575,000 homes, and there's only 834,000 left, I really don't see it's going to make a dent in the current real estate market that what we're seeing right now. So let's take a look at just foreclosure rates when it comes to your city in your area. Here's Nebraska right here. So foreclosure percentage up 0.1%, which is about a 33.3% change year over year for non-payments. That's over this right here, 4.2%. for non-current loan population and 33% less. So you can see where your city is at and really determine if you're in a higher area where there's a foreclosure issue in your state. So guys, if you appreciate content like this, thanks for watching. I really appreciate it. Feel free to like and subscribe to the channel. I would greatly appreciate it. And I look forward to seeing you guys in the next video. Take care.